Welcome back to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're live from inside ETFs in Hollywood, Florida. And joining me now is Matt Patterson. He's a co-founder of Handle Indexes, and we're going to learn more about the 7HANDL index. Thanks so much for joining us at booth 207. Let's learn more about the strategy, why it's developed, and how it got its name.
Well, thank you for having me, Jill. What we're trying to do here is use the teachings of modern portfolio theory to provide a better solution to investors who are seeking high monthly income. Traditionally, these investors have relied on things like closed-end funds, which have several deficiencies. One, they have high fees, lack of transparency, and they've got an extra layer of volatility associated with their pricing mechanism from premium discount fluctuations. So we wanted to create a solution that would be an improvement over closed-end funds. And you also see a lot of investors reaching into asset categories like high-yield bonds, MLP funds, covered call strategies that have a lot of idiosyncratic risk. And one of the fundamental teachings of modern portfolio theory is that you're oftentimes better off levering up a very well diversified portfolio and can earn better risk-adjusted returns that way than by chasing yield in idiosyncratic asset categories. So we developed the Nasdaq 7HANDL index, and it's essentially a 70% fixed income, 30% equity fund of ETF or index of ETFs. Half of the index is what we would call a core portfolio, and that consists of 70% U.S. aggregate bond ETFs and 30% U.S. large cap stock ETFs, all very inexpensive, low cost ETFs. The other half of the index is what we call the Dorsey Wright Explore portfolio. And that invests in 12 different asset categories that have traditionally provided high levels of income. And on a monthly basis, we rebalance those 12 ETFs from each of those categories, where there's one ETF from each of the 12 categories, and it's rebalanced using a Dorsey Wright algorithm that takes into account yield, volatility, and value to weight them on a monthly basis. So that's the index in a nutshell. And we intend to pay out or to earn total return sufficient to pay a 7% monthly distribution.
And that's how you get the 7HANDL.
And that's why it's called the 7HANDL.
All right. And the obvious question is, why team up with Nasdaq for the index?
Well, I previously co-created Nasdaq Bullet Shares indexes, which to date have raised between $8 and $9 billion of assets. And during the process of working with Nasdaq, I just had a great experience. Great group of people there. Technologically speaking, I think they're the best in the indexing business. And, I think with the acquisition of Dorsey Wright, they bring a research component to the table that's unmatched in the industry.
All right. Well, thank you very much for that. But what kind of investors would use this index?
I think, anybody who's seeking high monthly distributions. So obviously, retirees and people seeking to live off their assets that they've acquired over their lives. But more specifically, I would look at financial advisors who follow Dorsey Wright and the research that they generate, and also anybody who is investing in either closed-end funds or funds of closed-end funds, or people who are investing in things like junk bond ETFs, which is a $30 billion category, and we anticipate that we'll earn higher risk-adjusted returns with a well-balanced, diversified portfolio that uses a little bit of leverage.
All right, and to wrap up, are any ETFs using the index to track?
Yes, we just had the first ETF that tracks the Nasdaq 7HANDL index launch last Wednesday. It trades on the Nasdaq exchange under the ticker symbol HNDL. That's Handle.
Well, thank you very much for joining us.
Thank you, Jill.
And thank you for joining me throughout the day. I'm Jill Malandrino, global markets reporter.